Hi, and welcome to the Market Alert for Thursday, the 2nd of March 2023. So Bitcoin and bullion jump, bonds and big tech dump as stagflation signs soar. March madness has started early. Stocks and bonds take a hit on Hawkish Fed bets after Kashkari and ISM data. And US stocks finished mixed with headwinds from US ISM and Hawkish Fed rhetoric there. So Bailey was out yesterday and he said nothing is decided, suggesting interest rates may rise less than thought. So it's all mixed messages, isn't it? Economic news for today, we've got CPI flash estimates, that's from the Eurozone, and then you've got the core estimate as well of the CPI flash. Then over to the US for the claimant count, and Waller will be speaking at 9 p.m, which doesn't affect us at all. So let's get on, have a look at the market, see what they did during yesterday's session. We'll kick off with the Dow. So yesterday we saw the Dow manage to come off the lows of this bar here. Over here we've got support here. This was on December the 20th, so there you can see the market finding support yesterday, which was a surprise given the weakness that we saw. But again, they managed to bring the market back. Still a confirmed downtrend for the Dow at the moment, and back to that 89 as well on the overnight. 30-minute chart, you can see that we had a lot of volatility here. Then we had a spike down. We took out the low, but they soon brought it back. It wasn't staying there for long. And then you can see this was retested a bit later, previous day's low, and then the market moving higher. But overnight, after trading to the previous day's high in the 200 MA, the market is back to the DP, where we currently see a retracement oversold, and the market possibly to make another attempt back to the upside. In the German DAX, inflation numbers came out yesterday afternoon, which wasn't spoken of in the economic calendar. Well, it was, but it was downgraded to a low economic news item, and therefore later on in the afternoon, as you can see here, the market's still sideways, but in the 30-minute chart, the market just selling off there once this news hit the market. And we got a bit of a bounce overnight. We had a gap up as well, but that gap has been filled as prices traded towards the 200 MA, and we're now sitting just above yesterday's low as well. This needs to hold, otherwise in the daily chart we're going to see prices come down and test these sort of levels. Certainly yesterday's low, and then we've got the low of the 27th there as well. So watch these lows just in case the market doesn't make its way back up. They're going to be very important, because then we're going to be looking for other areas of support to the left where prices would likely to move down to. In the 5-minute chart for yesterday, you can see it was a choppy start once again. Market up, then back down, then back up, then back down, and eventually mid-morning the market making its way up. And this was short-lived as well, as the market traded sideways. Came back below the high, tried to find support here, and then came down straight through the 200 MA. Became a bit of a resistance for a while. Managed to move back up, but found resistance at the 50 EMA and R1. And then down she came, as can be seen there, as the futures closed at 4:30. The market selling off sharply, and then making its way back, as you can see here. And then overnight, as we just saw in the 30-minute chart, we had the gap, which is now being filled here, all the way down, finding support there. Momentum starting to switch to the upside, and the same there at the moment, as prices are attempting to make their way back as I actually record this. Don't be surprised if we get a shake out to the low, take out the weak longs, those that have already gone long, take them out, and then bring the market back as well. This week's trades, 416.61, 2.28 on the profit factor, and 50-50 for the win-loss ratio there. It's been an interesting week, and that sideways action in the German DAX that we've seen there makes it very difficult, as you can see, because 1 minute the market's up, then it's down, and as you get stuck in those sideways moves, particularly that we saw yesterday when the market kicked off in the 5-minute chart, which has not been too dissimilar all week. So yeah, you just have to live with that. When the market gets into a sideways move in the daily chart, you're going to get this sort of action where 1 minute it's up, and then the next minute it's making its way down, and then back up, and then back down again, until eventually they sort itself out and the market goes in the direction it chooses to. But yeah, on the whole, not bad at all. In the S&P, an interesting level here. The market heading down towards that 89. We're just taking out the 200 MA. The market found support at this level yesterday in the 30-minute chart. That is the low there. Market needs to get back above this and head back up if it's got any chance of holding this 200 MA and the 89. It may come down and test the 89 and then reverse back, but it'll want to do its best to stay above the 200 MA there. UK up yesterday on comments from Bailey saying that it's not over with interest rates, but I don't know whether I want to or not. I mean, it was just the most ambiguous, complete and utter tosh I've ever heard a central banker speak, and that takes some beating with the likes of Powell and Bernanke and Yellen all combined. It's just the clown show with these people. Anyway, that aside, yesterday the market showing some buying in the FTSE, but it depends whether it's got the strength to move to the upside or not. Will be dictated today. So down in the 30-minute chart, there you see the market moving up close to, well, it came off the low yesterday in the futures. Then in the cash market, continuing to move up. Then Powell, not Powell, I keep calling him Powell, they're all the same, aren't they? It's just that Powell's out more than Bailey. Bailey out, sent the market down, then gap up on the overnight. The gap's been filled and we're down at the DP at the moment. It's not too far back to the high for the FTSE, but again, we're going to have to wait and see. But there's certainly weakness building in the background because inflation isn't going away. In the currencies, GBP, JPY sitting at the 200 MA. You can see they've been holding the market at this level. There's a bit of supply coming, but the market's not gone down, so they've absorbed the sell orders at this level yesterday. Need to get back above 62.78 and also take out the high of Tuesday's price bar, and get above that 78 as well. 30-minute chart fell off a cliff yesterday, down 150 points, then found some support, made its way up, and overnight in Asia the market sideways, sitting on the DP and poised to look, well, it looks like at the moment to move to the upside, but you never know. The pound tried to hold yesterday as well on comments from Bailey, but overnight it's all been discounted and the pound is moving lower. Now you can see the market up, then Bailey speaking, volatility to the DP, then selling off down to the S1, and then a rebound here back to the close of Tuesday, then down, and then back up with the retracement, and then back down overnight, finding a bit of support. Watch the low if you're a trader of the pound at the open later on this morning. Meanwhile, in the dollar index, yesterday the dollar down, the metals up, and overnight reversal of this. We're seeing a bit of strength come back into the US dollar, with comments obviously affecting this yesterday from Kashkari, but overnight these have now been discounted and forgotten. Let's have a look at the metals, and kicking off with silver. We got a bit of demand yesterday, but the market's starting to show weakness again. We're going to take out this recent low, as I've said before, at $20.39. We're going down to $20 in my book. Generally, that's what happens. It's not about having a crystal ball. They just keep hammering this market to get it down. I'll spare you all of the what's going on with Bank of America, but you can see yesterday the market trying to hold, and then overnight it's been slammed down to yesterday's low, and we're now approaching it, and we're going to go through that and continue down during today as the dollar continues to gain a bit more strength. Same in gold, managing to pump up yesterday. Good supply there at the 50 EMA and the 20 bar moving average, this too also likely to make its way down as well, unless something comes out to support it. But gold certainly a lot stronger than silver during yesterday, and that's reflected in the gold-silver ratio. As can be seen here, we've only had the one day where silver's performed better than gold, and now you can see silver's getting hammered because the gold-silver ratio is moving back to the upside. Okay, that will do it for this one. Let's see what happens during today's session as the markets open at 7 a.m. and with the flash news as well later on this morning. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.